welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer with First Source Bank. Joining me today is Jason Cooper, one of our Senior Portfolio Managers. Jason, let's take one last look at 2025. We just came off the third 15% plus return for the S&P 500. Can you share with our viewers how we kind of got there for the S&P?
Yeah. So one more look back to 2025 in the S&P 500. It was another great year. We have now 3 years in a row that we've seen really good returns from the S&P. And we hear a lot about technology. We hear a lot about AI and the Mag 7. But I think what was encouraging in looking back at 2025, and certainly they provided their part in terms of returns, but it was the fact that we saw a broader representation from the S&P in terms of the other stocks. And on this chart, you can see that when you look at the other, call it 493 names that represent or are in the S&P 500, close to 10% of that return came from those particular stocks.
It was truly nice to see a diversification. Obviously, our clients have diversified portfolios. Why don't you share a little bit more about how other parts of the markets did?
Yeah, so I thought I'd bring another chart with us. This one is a fairly popular chart we see in a lot of pieces, but this is called the quilt chart. And it really, what this wants to show you is that not one particular asset is the winner every year. And I think there's importance to that because a balanced portfolio, which is also represented in this, does a very good job and most times avoids the bottom half of this chart and is a laggard relative to other parts of the market. So diversification, right? So this is another way to show that diversification isn't just a risk management tool, but it can also be a return generation tool.
Fantastic comments as we look back to 25. We're now going to jump ahead 9 months. We have the midterm elections of 2026 coming up. Why don't you share with our viewers what we might expect in a stock market in an election year?
Yeah, we're getting this question a little bit more here now that we've flipped the calendar and it's 26. It really doesn't matter, and that's why I brought a new chart that shows and goes back to the 1933 to the present. It shows that if it's a non-election year, it shows when there's a presidential election and when there's a non-presidential election or a midterm. And really, you still see positive returns. They might change a little bit, but they're still positive and heading in the right direction.
We're going to take that one more nuanced level. What does it look like if we have different mixes of government?
Right. So we certainly have one party that's in control right now of the government, but what would it mean if we had a split-controlled government in the case of midterms and what happens? And what you find is that when you have something like that, that's the split control, what it does do is it provides a little bit more certainty, believe it or not. And so that means, a lot more things are looked at, negotiated in terms of what happens. And what we see is that markets like this. They actually like uncertainty when it comes to what control or the split control of a government might be.
Thank you very much. There'll be, sure, lots of questions over the coming months about the midterm elections and what we're doing with investors. If you enjoyed today's video, I encourage you to share it with your friends or family. If you do not currently subscribe to the Market Share, you can do so by scanning the QR code at the end of the video or emailing us at wealthadvisory@firstsource.com. And as always, thank you for the opportunity to serve you and your family, and have a great day.